Welcome back. I'm Dhesi. Here's what matters this week. This is the biggest week of the quarter. There's 4 central bank decisions in 3 days. The Fed on Wednesday, the Bank of England and the ECB on Thursday, and the Bank of Japan on Tuesday. Also, 5 of the world's largest tech companies report earnings inside that same window. Also, we have PCE inflation on Thursday, and underneath all of it, Brent crude has rallied 12.6% over the past 10 days. So the Iran war is grinding into its 3rd month, and the energy shock is no longer a passing event. It is the macro backdrop everyone is reacting to. If you are running risk this week, this is not a calendar to be casual with. So every session has a binary event. Every event has direct implications for rates or FX or equities or all 3. So let me walk you through what happens and where I think the surprises sit. So the Fed on Wednesday, that should be Powell's last meeting in the job. This is the dominant event of this week. So the Fed decides on Wednesday, and actually what's expected is no rate change and there are no new projections. But this is, in all likelihood, Powell's final meeting as chair before Walsh takes over. So 2 pieces of context that shift the read. Firstly, the Department of Justice has dropped its investigation into Powell. That removes a political overhang from the Fed's decision-making process, and it clears the way for Walsh's Senate confirmation. Second, Walsh used his confirmation hearing to lay the groundwork for cuts. He cited productivity-driven disinflation. So he questioned the core PCE inflation measure, and that is a nominee preparing the market for an easing cycle, not a hawkish one. So the question on Wednesday is not the rate decision, it's going to be more around the framing itself. So will Powell signal continuity with Fed's wait and see stance and let Walsh take the dovish baton when he arrives? Or will Powell push back against the dovish repricing the market has done since Walsh's hearing? The market has been pricing more cuts back into the curve over the last couple of weeks. So if we look at the 2-year dollar swap rate, that's at 3.89%, 10-year at 4.18%. That is a curve pricing a dovish handover, not a hawkish hold. So if Powell sounds neutral and lets the market run with its dovish read, the rally extends. If he pushes back to defend the Fed's independence and reset expectation, the front end gives some of that back, and that will happen fast. For rates desks and for FX desks, for anyone with rate sensitivity exposure, Wednesday afternoon, 6 p.m. London, is the single most important moment of this week. So moving on to Bank of England and ECB on Thursday. Energy inflation versus growth drag. 24 hours after the Fed, the Bank of England and the ECB land at the same time, both expected to hold. The interesting part, however, is how they each frame the energy shock. The Bank of England is a forecast meeting. That means new inflation and new growth projections. The growth projections come down, the energy shock is hitting UK activity. The inflation projections move higher in the near term as energy passes through. The medium-term inflation path is the real question. If the Bank of England is willing to look through the near-term spike, then the dovish stance Bailey signalled at the start of the month then holds. If they are forced to revise medium-term projections higher, that stance then becomes harder to defend. So what I'm watching most carefully on Thursday is the voting split. A unanimous hold is one signal. A dissent in favour of a hike is a very different signal. So UK CPI hit 3.3% in March, a level that MPC cannot ignore indefinitely. I would not be shocked to see at least one dissent. So the ECB, however, has a much harder job. The Eurozone is more exposed to energy supply risk than the US or the UK. Also, Lagarde will need to acknowledge that without sounding alarmed. And the market is pricing some hike risk into the ECB curve already. But the bar for Lagarde to disappoint dovishly is very low. So the Eurozone is also dealing with the services weakness. Composite PMI fell into contraction in April for the first time in 15 months. So watch the Euro rates curve in the immediate aftermath of Lagarde's press conference. Looking at 2-year swap rates, Euro, they're at 2.73%, the 10-year at 3.03%. And that is the curve to watch. For practitioners, sterling and euro hedging decisions hinge on Thursday, so do keep a lookout. Hot CPI persistence and dovish central banks is the worst combination for borrowers. And that is exactly the scenario the market is trying to price. Moving on to Magnificent 7 earnings, what they tell us about the AI trade. So 5 of the world's largest companies report this week: Microsoft, Google, Meta, Amazon and Apple. The Mag 7 excluding Tesla and Nvidia, which already reported. So why does this matter beyond equity desks? Well, AI related names make up a meaningful share of investment grade credit indices. So earnings disappointments do not just hit equity prices, they cascade into credit spreads. The composition risk is real. So what to watch in each? So Microsoft Azure growth versus Google Cloud. So last quarter, Azure ran 38% versus Google's 48%. The market is asking whether Azure can re-accelerate to justify the capex that they're putting in. Capex guidance from all 5 names is the second key watch. If they raise capex guidance again, the AI investment cycle is not slowing. If any name hesitates, the market reads that as a top in capex enthusiasm. Meta is guiding 30% revenue growth on improved ad targeting. Apple is the wildcard with services growth versus iPhone weakness. So the practitioner read is positioning into earnings is light by recent standards. And that means clean beats can extend the rally. But the asymmetry is one big disappointment, especially in a Fed week environment. And that could trigger broader risk off. So for credit desks, watch high yield and AI heavy investment grade sub indices specifically. So looking at US IG credit spreads, they are at 80 basis points, US high yield at 286 basis points. If anything moves, it moves quickly. Dollar swaps, 2-year at 3.89, 10-year at 4.18. The curve has steepened, all but slightly, as the front end prices dovish Fed expectations following the Warsh hearing. The 2-year is actually sitting at the bottom of its recent range. So Wednesday's Fed decision is really the catalyst. So wait and see Powell with no pushback against the curve. Front end stays anchored. Powell pushing back to reset the dovish repricing. That will go into a sharper move higher in the 2-year. That drags the rest of the curve. Sterling swaps, 2-year at 4.43, 10-year at 4.69. Sterling rates have priced limited cuts given UK CPI at 3.3%. And Thursday's Bank of England decision and the voting split is the binary event for sterling rates. On Euro swaps, 2-year at 2.73, 10-year at 3.03, and the ECB is on Thursday. The curve will move on Lagarde's tone more than the decision itself. The bar for a dovish surprise is actually genuinely quite low. So moving on, for treasurers and rate-sensitive borrowers, 3 central bank decisions inside 30 hours. The window for fixing decisions is actually quite narrow, so the window for waiting and reacting is non-existent. So what I would say is plan now. So there's two channels. Dollar first. Euro dollar at 1.17, cable is at 1.35, and yen is at 159. So the dollar has softened over the last week as the dovish Fed handover narrative has built, and the DOJ investigation into Powell has been dropped. Okay, so the pivots this week. Wednesday afternoon, Fed and Powell's tone. Thursday, Bank of England and ECB. Three potential dollar moving events in 24 hours. So positioning is light. That is a setup for an outsized move on any clear signal. The BOJ on Tuesday is the wild card. They have been resistant to hiking despite a weak yen. So open to normalization, the yen strengthens fast and unwinds carry trades. If they hold the dovish line, then yen drifts higher. The energy shock is also feeding through into Japan via import prices, so yen weakness compounds the inflation impact. And sterling, as we said, is at 135, so Thursday's Bank of England is the local catalyst. So for corporates with FX exposures, this week is when you find out whether your hedging assumptions held or not. Short-dated forwards into the central bank window. Avoid overextending duration on FX hedges until after Thursday. So looking elsewhere, Brent is at $106 per barrel, and that's up 12.6% over 10 days, up just over 9% over 5 days. The Iran war is grinding now into its third month. The oil price is reflecting sustained supply disruption, not the spike and fade pattern of earlier shocks. And Goldman Sachs has actually raised its oil price forecast as war disruption drags on. Mexico is also sending crude to Japan to ease supply constraints from the war. The physical market is adapting though around the disruption rather than expecting a quick resolution. And that tells you the spot price has fundamental support around current levels. If a ceasefire, however, does arrive, the path back to pre-war pricing is going to be gradual. The Iran ceasefire is open-ended through May 1st. The War Powers Act 60-day deadline is unlikely to bind Trump in any meaningful way. The risk premium in oil is structural, not transitory. So looking at PCI, inflation prints on Thursday, 24 hours after the Fed will not have seen this print when it makes Wednesday's decision. And that makes the data release a clean read on whether wait and see has been justified. A hot PCE number and the dovish handover narrative gets harder to sustain. If, however, there's a soft PCE, then the curve extends. Gold, that's at 4,700, and that's down 2% over 10 days. Despite the energy shock and central bank uncertainty, gold has been weakening. The dollar safe haven bid is holding up against the geopolitical premium. So watch whether gold finds a floor this week. If it cannot, the dollar is a dominant risk-off asset right now, not gold. So looking at S&P 500, that's at 7,166. That's up 1.7% over 10 days. Euro stocks at 5,924. That's up 0.1% over 10 days. The Nikkei at 60,500. That is up 2.6% over 10 days. And the Nikkei is leading the global rally. And that is consistent, actually, with weak yen feeding into Japanese exporter earnings. So the story for equities this week is Mag 7 concentration. Microsoft, Google, Meta, Amazon, and Apple, all reporting alongside the Fed. To date, this earnings season, 28% of S&P companies have reported already. 84% have beaten expectations. That is a strong, really strong base rate. The question, do AI-heavy mega caps extend that pattern or do they break it? So moving on to crypto, Bitcoin at 77,800, and that's up 4.2% over 10 days. tracking the risk tone but not leading the rally. Okay, so looking at the week ahead, Monday is your setup day. US Dallas Fed manufacturing, 2-year and 5-year Treasury auctions in the afternoon. Quiet by this week's standards on Monday. So then moving on to Tuesday and overnight is where it starts. So the Bank of Japan rate decision. This is the wild card of the week. US consumer confidence lands in the afternoon. Wednesday is the dominant day with the Fed rate decision at 6 p.m. London, followed by Powell's press conference. Earlier in the day, you have durable goods and housing starts in the morning. Then the Bank of Canada rate decision at 1:45 London time. And after the US market closes, Microsoft, Google and Meta all report. Thursday is the data and central bank sandwich. Bank of England at 12 p.m. London, ECB at 1:15 p.m. London, US PCE inflation at 12:30 London time, and that lands right between both of them. Then Apple and Amazon report after close, Japan CPI overnight, and then Friday close of the week with the US ISM manufacturing and Chicago PMI, alongside end of month rebalancing flows. And underneath all of it, Brent crude and the Iran ceasefire status. The current ceasefire is open-ended through May the 1st. Any breakdown headline reverberates through every other event on the calendar. So that's your busy week ahead. Bookmark it, come back Friday, see how it aged. I also send a daily version of this every morning on Telegram. The free link is below. Subscribe if you want the next one and drop the one level you're watching down below.